Hey, welcome to the Weekly HODL with Shibs, where I bring you weekly Bitcoin adoption news and interviews from experts in the space. This week, I got absolutely schooled by CJ Konstantinos, a longtime Bitcoiner and entrepreneur, on Bitcoin mining fundamentals, economics, and incentives. We also discussed Bitcoin as the world's most pristine collateral and the ever apparent failures of the US dollar as the world reserve asset. CJ has one of the most well thought out theses I have ever heard in this matter, and I really enjoyed hearing what he had to say. Please like and share this video with your friends and family, as it's important to hear and something that you're not going to hear in mainstream media until it's probably too late. And don't forget to subscribe for more good Bitcoin content moving forward. Thanks again, but let's get right into it. All right, CJ, welcome to the Weekly HODL, man.
Thank you. Thanks for having me. It's great to be here.
Yeah, for sure. Congratulations on your recent run. I honestly, I hadn't heard your name before until recently, where a friend said I should have you on the show. And I watched some of your recent videos, and you're absolutely killing it, man. You're bringing the energy, you're bringing the passion, and more importantly, you're bringing like good economic, a good economic understanding with some real world application of running Bitcoin, which I think is really healthy for the space.
Thank you. I appreciate it. Yeah, I do my best to kind of just break down Bitcoin through the business 101, economics 101. Let's just think about this like common sense, take it step by step, and then, hopefully some of the light bulbs click and people become hodlers.
Yeah. So where have you been, man? Why haven't I seen your stuff before? Like, what's this? Were you one of these super like shadow secret coders that were hiding behind the veil, or?
I learned about Bitcoin in 2013 from this guy named Jeff Berwick, the dollar vigilante, real badass, smart economist, just a great guy. Sees right through all the lies, and he's still around today. People should check him out. He knows what he's talking about. He's got interesting perspective on everything. And I wish I listened to him, because I watched Bitcoin for about a year before I actually put my money where my mouth was. And it took that long to kind of just understand it. And at first I understood it as digital gold. But as I started getting more and more involved with it, it wasn't one of those things where I understood it and I was like, okay, this is great. I'll hold Bitcoin. Let me go back to my life. Because I had a background in finance and accounting, and I was learning things that I wasn't taught in school, it piqued my interest and I was learning new stuff. So I kind of got sucked into it, and I got into mining later on in 2015. And then I was mining during the 2016 halving. That was rough. I mean, seeing that halving hit and then watching my mining profits just get cut in half was like, whoa, that was a wake up call. Of course, the bull run helped make up for that, but it's still,
Yeah.
but that, I was in the background, and I built a small community of people, and finally, got to the point where, like, listen, man, you help us, you help our families, you got to get your voice out there. And actually, Adam Stokes, who did an interview with me, he told me, he's like, look, you buy Bitcoin for your kids. Every Bitcoin that you have is for your children, and you know it. And I said, yes, true. And he goes, well, listen, all of your opinions, all of your interpretations, all of your explanations, if you don't categorize these, if you don't get it organized, your kids aren't going to be able to see what you thought when the time is right. And man, that, for whatever reason, that was the one that stabbed my heart. And I was like, he's right. I'm doing this for my kids. I'm doing this so that future generations can experience a better life without fiat currency, without debt slavery. And in a system with correct and positive incentives. So that's really what motivated me to come out here onto the stage and give up my operational security and let people understand, this is happening, whether you believe it or not, whether you want it to happen or not. It's a natural cycle, and we all need to get prepared for it. And the sooner we start, the better.
Yeah, I love that, man. I mean, that's part of the reason I do this too, right? Like, I think, Greg Foss says for the kids, right? After all, every one of his tweets. But I think most of the long-term Bitcoin holders, that's the way they think, right? Like their long-term focus and low time preference thinking is really directed towards like it's not just like, hey, how can I get rich, or how can I pay for a house in 2 to 5 years? It's like, how can I leave a legacy behind for my children? And part of the reason I started this show is obviously to keep Bitcoin simple for my viewers and for new viewers and for people, when this next bull run happens, for the people that are just going like, where can I find a resource, or who can I touch? Who can I listen to, who I kind of enjoy, watching or listening to, that makes sense of this stuff. And then also leaving these videos for my children in the future, when maybe they're in a much better position. They can look back and go like, oh, hey, look, those memes that are like, look what, grandpa was buying Bitcoin in 2022. Like, what a fucking boss,
He was crazy, but we love him.
Yeah, right. Like and there's a little bit in all of us, I think, that it's like, hey, we're fighting for a better world, right? Like, we're fighting for a better world for our children, and there's nothing more important than that.
Absolutely.
So that's really really cool. So you mentioned you got into mining like pretty early. So were you mining with and explain it if you would a little bit, but like, were you mining with ASICs at that point, or were you still on GPUs or CPUs? What were you using?
Yeah, I started with GPUs. I actually built my own rigs. Didn't really think it through. I built them out of wood, but I was just kind of just doing it from scratch and having fun with it. I built home computers before, so I had a general idea of what I was doing. And, I advise everybody to go ahead and pick up a hobby miner. You're not going to make money, but the value of what you learn through going through the process will be so much more than what it cost you to buy the miner and to hook it up and to run it. And mainly what I'm talking about is producer economics. Earlier I mentioned I was mining through the first halving, and that kind of like shell shocked me. Well, Bitcoin mining is a lot like any other production business. Matter of fact, Bitcoin is the lowest risk, highest reward commodity to produce in the world. And the reason that is the business logic that goes behind it. So any producer or any entrepreneur who's looking at the market, the number one thing they're depending on is the free market price discovery signal. And that's a supply demand equilibrium. And what you're looking for are profit margins, right? I mean, you go and you make a water bottle, or you produce a car part, or you produce electrical components because there's profit in it, right? Profit drives business, profit drives innovation. That is the free market signal. It's a profit signal to entrepreneurs to get involved in the business. And that's what Bitcoin price does. Bitcoin price drives the Bitcoin network, and it brings more producers to the network. And as it brings more producers to the network, Satoshi built into the algorithm what's called the difficulty adjustment. So it's really the only commodity in the world that when more people start producing it, it becomes harder to produce. That's what the difficulty adjustment does. It increases the difficulty to produce a Bitcoin. Well, when you increase the difficulty to produce a Bitcoin, you increase the cost to produce a Bitcoin. And what happens is the cost of generating a Bitcoin gets driven towards the price. And Satoshi described this as a commodity cycle. He said all commodities price tend to gravitate toward its cost of production. So there'll be times when the market price trades at a discount, like it has been recently, to the fair value or to the cost of production or natural asset value. You can define it however you want, whatever makes it easier to understand in your head. But that natural asset value doesn't have to equal the price. The point is when the price is different from the natural asset value, we finally get to answer the question, is Bitcoin cheap or is Bitcoin expensive? And obviously, you want to be buying Bitcoin when it's cheap or at a discount. And, well, I don't really feel comfortable saying you want to sell Bitcoin, but if for some reason you are forced to sell Bitcoin, you'd want to do it you wouldn't do it after FTX collapses and it's selling at a huge discount for its natural asset value. You would do it in the middle of a bull run when you know you're getting a premium to that natural value. So simple concepts like that.
Yeah. So in most simplest terms, you're describing the essentially the value or the price of Bitcoin is undervalued or overvalued, dependent on the cost to produce a Bitcoin. Relevant
to its cost.
Yeah, relevant to the cost to producing a Bitcoin.
I like to compare it to like a house, because everybody needs a house. It's in our hierarchy of needs. We need that place to put a roof over our heads. Well, if you know that the person that's building your house is building it for $1 million and then they're going to charge you $10 million for it. Whoa, wait a second. Am I getting ripped off here? How much of a premium am I paying to the cost of production and labor? What? It makes you ask the question, like, this seems too expensive. Well, it is. And price is never going to be the cost of production. It's always price relative to cost of production. So anybody who is an investor, in real estate, when they call it the replacement cost, right? So when a house starts to go close to its replacement cost, which typically happens in foreclosure type events, then those things get bought up really quick because they know, man, even if I had a builder and a contractor and I had access to all these materials and I could source them all and I could build this house, it would still cost me more to do it myself, even with all those connections, versus just buying this house straight up because it's in foreclosure. So the cost of production for astute investors really forms a baseline for what I like to call the natural asset value. And I do get some kickback on this, so I do want to dive a little deeper because there's probably some listeners there that are saying, well, if I dig a hole in my backyard and it costs me $100 to dig the hole's not worth anything. Yeah, we know. In order for the cost of production to be a baseline for natural asset value,
there's got to be demand.
Yeah, there has to be demand. Absolutely. And the base layer of demand for Bitcoin is growing exponentially. I believe it's growing faster than the internet did. So we're seeing a really large base layer of demand grow exponentially. We're seeing the largest base layer of demand, which is currently on the US dollar, start to be chipped away at. And that doesn't mean it's going to disappear overnight, but it does mean that the supply of dollars are going to continue to go up against a lowering demand, which means the price is going to go down always. So we need to be prepared for that as we move into the future.
Yeah. So before we go too much further, I want to take a step back. You had mentioned a couple things. You mentioned the halving as well as difficulty adjustment. I want to go back a little bit further to those people that might not even know. When you talk to somebody who doesn't know much about Bitcoin, they go, "Well, what the heck is mining, anyways?" What does mining even mean? Can you help the viewers understand exactly what is the purpose of mining as far as the Bitcoin network goes? Like, what is its purpose?
Yeah, absolutely. And I apologize for kind of running too forward too fast there, but that's a great question. And here's the best and easiest way to think about it, guys. Imagine if Visa all of a sudden said, "Listen, we need help processing transactions. So what we're going to do is we're going to let you set up your computer, process transactions, and then whatever transactions you process, we're going to pay you for." Well, people will be like, "Wow, that's a fantastic opportunity. Sure, I'll let Visa use my computing power to process its transactions because I'm going to make a portion of the profit." That's the same thing with Bitcoin. Bitcoin needs miners to process blocks. It needs miners to execute transactions. And the block subsidy is what rewards the miners. The halving is directly correlated to the subsidy. It started out with 50 Bitcoins. It gets cut in half every 210,000 blocks, which roughly with 10-minute block times, that's 4 years. So that's when you hear us talking about the next bull run. Well, how do we know that there's going to be another bull run? Well, I thought, what if this is going to zero? What if this is a tulip or something like that, right? You hear those kind of comments all the time. Well, the halving is the catalyst to a new price discovery cycle. And why do we know that? Because the underlying economics of Bitcoin production through miners changes because their cost basis changes. It doubles overnight because I was getting 50 Bitcoin per block. Now I'm only getting 25 Bitcoin per block. And right now it's like way less than that. It's down to 3. So the reward is meant to subsidize and pay for the computing power until finally we get to like 2140 something. And then there's no subsidy remaining. But by that time, most miners believe that there'll be sufficient transaction fees in order to incentivize the miners to keep mining. And I do agree with that. And what's amazing is that the real value of cost of production is, if you think about it, because these blocks are every 10 minutes, or at least they should be. And I'll interject about difficulty adjustment right there. The difficulty adjustment, which can make it easier or harder to mine Bitcoin, is gauged on that 10-minute block time. So if there's too many miners who are joining the network and contributing their computing power because the price is really high and they want to get paid to process transactions, and the blocks are being processed at a faster than 10-minute pace, the difficulty adjustment will increase the difficulty. And that happens every 2016 blocks, or about roughly every 2 weeks. And when that happens, it increases the cost of production. Well, what that means is that the floor price, the natural asset value of Bitcoin, is actually going up because the cost of production is going up. And just like any other good or commodity, a producer can't sell Bitcoin for less than it costs them to produce, right? I mean, if you're building a car for 20,000, you can't sell it for less than 20,000. You're going to go out of business. Hello, it's common sense. You need to be able to profit. Well, see, that's the difference with Bitcoin and with gold. Let's say the cost of production of gold is $1,800 an ounce. If the price goes below $1,800 an ounce, well, what's going to happen is miners are going to go out of business. And as miners go out of business, the supply of gold hitting the market is going to drop. Well, when the supply of gold is going down against a consistent base layer of demand that gold has, then the price is going to go up. And eventually the price is going to go up above the cost of production. And then more producers will enter into the market, create supply. The supply will hit the market, and then price will come back down. That's the commodity cycle. Well, in Bitcoin, it's not about just having the difficulty adjustment drive natural asset value up over time, but it's also about the sustainability of the network itself. Because if the price of Bitcoin goes below the cost of production and a miner goes out of business and has to turn off their miners, what happens is that with less computing power against a higher difficulty, it now takes longer than 10 minutes to produce a block. So the difficulty will then decrease. Well, when the difficulty decreases, the cost of production comes down. And that means miners will be able, some miners, maybe not all of them, but some miners will be able to come back and join the network. And really what this is about efficient energy. So if you're taking anything away from this, especially with the recent New York Times hit piece on Bitcoin mining and its energy usage, Bitcoin miners are going out and seeking the cheapest and freest forms of energy. We are not interested in reviving expensive, wasteful forms of energy. Matter of fact, most Bitcoin is capturing wasted energy. There is so much gas that's being flared because there's not pipeline infrastructure, or there's so much gas that's being produced, there's not enough demand to consume the supply. There's so much going on, and there's so much wasted energy within the system as it is right now, that we don't need to be worrying about Bitcoin building out new energy facilities that are going to produce waste. We're busy making the existing facilities more efficient. And that's the reality. And we're economically driven to do that, because the lower our cost of production, the easier it is to stay in the business, and the more profitable we are, depending on where the price is.
Yeah. It's that's a great explanation. Thank you for going through that. It is really an interesting business. It's one that I kind of dabble in as a hobby, but when I look at it from how competitive mining is, it's terrifying to me. You know what I mean? With the amount of capital that's going in, the advantages, the connections that some of these major miners have with energy producers, or wasted energy suppliers, and then with the dynamics of the halving, as well as the price fluctuations that we've seen in these commodity cycles that you mentioned, it can make for some very difficult times if you're not managing your cash properly. And I think we saw somewhat recently. I can't imagine that a lot of these miners, some of these major miners, are in great positions after the last couple of years, right? Where they've just been injecting more and more capital for miners because, they were purchasing all these during the last bull run when there were, Bitcoin was at 60,000 and the cost of production, was a lot lower. To getting those miners online when Bitcoin dropped down to 15,000, and the marginal cost of production was what? I mean, what does it cost at like a typical kilowatt hour to produce a Bitcoin, or like what is the average cost?
There's a couple different ways to measure it. I like to measure it as the entire cost of producing one Bitcoin. I think that's the best way to go. It's the most simple way for people to understand that natural asset value. And right now, for me, I am a little bit of a smaller miner and I pay a higher kilowatt price per hour, but it costs around $19,000 at this time for me to produce a Bitcoin. So when I can produce a Bitcoin for 19,000 and turn around and sell it to the market for 30, today's a good day.
Yeah.
A couple weeks ago or a couple months ago, it was costing me 18,000 and change, and it was 15,000 and change. Well, then I better understand what's happening and why in order to make the right decisions. Or guess what? I'm going out of business because the traditional markets, there are no bailouts in Bitcoin. There is no mercy in Bitcoin. This is a true free market. And as you said, miners are some of the most competitive people in the world. And that's really what's my Bitcoin fair value account, kind of like my alt Twitter account, is so valuable because miners don't really share their alpha. I created the Bitcoin fair value algorithm for treasury management. And it's a very useful tool. Use it however you like. I shared it. It's open source. But in order to understand how you want to manage your treasury through all of this, it's going to make the difference of whether you're here after the halving or not.
Yeah.
Companies, they're bringing that fiat mindset. I know because I was paid to be taught like this. Assets equal liabilities, and they call it capital efficiency. But guess what? If your liabilities all go wrong at the same time, that means you have no assets left.
Yeah.
So free market in a Bitcoin Austrian market, assets are going to be greater than liabilities. And you better be managing your farm with that mindset or else you will disappear. And especially with the public miners, they're bringing in other people's money. They're using people's, and they might not understand those risks. I understand those risks because I lost my money. I asked the tough questions and learned from my failures because I lost my money. Whose money are they going to lose to learn those lessons? It's a very dangerous game to get involved in. The best way to get involved is to just buy Bitcoin and hold because it's for the kids.
Yeah, absolutely. Oh man, it reminds me of I went to Bitcoin 2022 last year, and I ran into a couple of guys from, I think they're from like the Texas area, just a couple of dudes saying, "Yeah, man, we're running these huge mining farms. We got investment money coming in. We're buying all these miners. We got them going." And I said, "Well, what's your plan for the halving cycle and the potential next downturn in the Bitcoin price?" And they're like, "Dude, do you know where Bitcoin price is going? Like, we just we're gonna mine as much as we can. We sell it right away." And I was just like talk of like total fiat mindset. Like, your advantage as a small miner compared to these guys is, number one, you're using your own money, so you're more attentive to it. Number two, you understand Bitcoin, right? Like there's a whole group of miners that are out there that can that are good capital raisers, that are good can pitch a good slide deck. But when it comes to understanding the cycles, understanding the incentives, understanding, how to manage through the difficult times, I don't think that there's not a ton of, we're going to keep seeing these miners go out of business, and that provides opportunity for the small miners like you who can pick up these, S19s and all these newer machines for cheap, right?
Yeah. I mean, at this point, after what happened over the last 6 months, I don't have any more electrical capacity. I'm fully, I can't fit any more machines, even though I want them. I want to buy. I mean, they've gone up a little bit over the past month or so, but there was a point there that they were so dirt cheap that I have a couple in spare just in case something breaks. But I want to touch on one point you said there, which is they're great businessmen, but not necessarily great Bitcoiners. And I think that's actually one of the reasons why we're seeing diminishing returns. People will keep talking about a diminishing returns theory. Well, when miners are raising public money, they have a fiduciary responsibility to the shareholder. So if you're mining something and it's costing, I guess around that time it was around 14, probably 12 to 14,000 to generate a Bitcoin. However, the price was at 50,000 plus. right? So at that point, when you're like 300-400 profit margins, you can actually get in trouble if you just hold that in your treasury. You have to bring that to the market. That supply must hit the market. Like you said, we're selling it immediately. Yeah, they're selling it immediately, not because they understand it. They have a fiduciary responsibility to the shareholders to generate that profit. So sometimes you win, sometimes you lose. But when you don't understand that dynamic, I think in the long run, you definitely lose. And that capital efficiency mindset of assets equals liabilities does not prepare you for the halving, because their balance sheet is based off cash flow. We're creating this cash flow that can make us roll over this much debt to meet this much interest burden. Interest is a probably the largest expense on their balance sheet besides actually building the huge building. Interest is that number one expense because it's expensive to borrow money. Even though rates were low, you still had to pay. Corporate debt isn't going out at zero. This is not a commercial bank at the Federal Reserve. This is a company raising, like Michael Saylor. He got great rates, but he still has to pay interest. So these companies are going to get caught rolling these debts over. I think a couple are going to get caught off guard because their cash flow is about to get cut in half, and they don't understand that yet. They haven't experienced it yet.
Yeah, and how do you service that debt? A couple months ago, right, when Bitcoin is $15,000, $16,000, and the hash rate is still blowing through the roof, right?
Yeah. The hash rate growth has been unbelievable. I recently posted on my Twitter. It took, I'm just going to use rough numbers here. You guys will have to fact check me or just check my Twitter to get the exact numbers. But from the Genesis block, which is the first block of Bitcoin, to get to 1 exahash, it took around 1,500 days, right? Then to get from 100 exahashes to 200 exahashes, it took around 800 days. Then to get from 200 exahashes to 300 exahashes, it took 372 days. Well, after the most recent difficulty adjustment, we're at 342 exahashes. So we are 42% of the way from 300 exahashes to 400 exahashes. It's only been 44 days since we hit 300 exahashes. So the amount of growth it's to find it except exponential. And there's got to be something going. It's not just these other machines that are turning on. There are some who's getting into the game, and it goes price signal. Price is above cost of production. The free market price discovery process is signaling to entrepreneurs, enter this market. There is profit to be made in producing this commodity.
Yeah, it's a brutal market, man, and that's honestly part of the reason I was just like, you know what, I dabbled in it and thought maybe I could make a business out of it, and I was like, no, I'm just going to get steamrolled. It's just going to be better use of my time to just buy Bitcoin and hold it. But we just said the word hash a ton of times. And we kind of breezed over it in the explanation of mining. But what is a hash, and what does that mean to people that don't know what that is?
Yeah, so it's just a way to describe the amount of computing power. So if you're not, it's impossible just to describe it if you're not familiar with it. So I'll just translate it. Imagine if you had like a USB disk and it's like 2 gigabytes, 4 gigabytes, 6 gigabytes, 20 gigabytes, or now you have these big office space things that are like 50 terabytes, right? So the more hash you have, the larger the computing power. Just like the higher the space you have in memory, the more stuff you can store. So when we talk about exahashes, we're talking about hundreds of millions and billions of hashes of computing power. So that's the best way to think about it. When you hear a low hash number, you think, oh, this is a smaller device of smaller computing capability. And if you have higher amount of hashes, then there's exponential computing power. And it's to the point now with the amount of hashes that are in the Bitcoin network. I like to think of the Bitcoin network as a quantum computer. Not only I've heard anybody talk about that, but if you think about what a quantum computer really is, it's a computer that's so powerful that there's no one other computer or even team of computers that can defraud it. Well, the amount of computing power going into the Bitcoin network, like going back to our example, what if Visa offered just regular people to process their transactions? Imagine everybody in the world was participating. So there's no one enemy, or there's no even team of enemies that can team up against Bitcoin, because there's just so much computing power going into the network that it truly is basically a quantum computer ledger that no one other computer can defraud.
Yeah, very cool. Thank you for that explanation. Now, I heard you talk a little bit on BTC sessions. Why are you bullish, or why are we bullish about Bitcoin, and the idea of Bitcoin being collateral in a world where our existing collateral is kind of falling apart and not as desirable as it used to be. Can you speak a little bit to that? Maybe start off with our existing form of collateral on a global scale and why that's failing, and then we can get into how Bitcoin may or does improve upon that.
Yeah, absolutely. So, this is such a big topic, and it really is complex. I mean, I went to school to learn this, you're not going to get it overnight. You might need to listen a few times, but I'll do my best to simplify it for everybody. Let's just go to the banking crisis real quick to describe like collateral. So what we do is we save our money and we bring it to the bank. Right now, most people think that the bank just holds the money for you for when you need it, but that's not what happens legally. Legally, you are lending your money to the bank. That's why you're getting paid an interest rate. They don't just pay you an interest rate to try to make you a customer, or you're lending them your money. And then once you lend them your money, there are certain laws and there are certain capital ratios. There used to be a fractional reserve law. Ever since Corona, it doesn't exist anymore. There's zero reserve requirements. So banks can lend based on risk and risk alone. They don't even need our money to lend. But the reserve ratio requirements, according to Basel banking, makes the bank buy a certain amount of collateral. And that collateral is what backs our bank deposits. So let's say someone brings $100,000 to the bank. Well, the bank is going to go ahead and they're going to take $30,000, $40,000, and they're going to buy U.S. Treasuries. And U.S. Treasury is government issued debt. It can be issued as a note, a bill, or a bond. A bond is like 30 years expiration to maturity. A note is anywhere between greater than a year and up to 10 years is a note. And then a bill is less than 1 year. So you can have different maturation timeframes on this government debt. Now, typically banks will buy the shorter time frame, the bills or the notes, and they'll use it as collateral because the politicians have made it legal for them. They've used the law to define U.S. Treasuries as pristine collateral that is a cash equivalent. So when they hold it on their balance sheet, they treat it as cash. It's a cash equivalent. And what it does is it represents the cash that you're lending to them, but only a certain ratio. Like I said, $30,000, $40,000. Now the other $60,000, $70,000 they take and they go do whatever they want with. Now, sure, they don't go to the casino and gamble it. But when you talk about the 1,500 trillion, the 1.5 quadrillion derivatives market where they do go, maybe it is fair to call it a casino. And what we found out is that the money that they took and they invested in commercial real estate, in government debt, and mortgage-backed securities, when the interest rates went up, the principal value of that collateral went down. And now there is what there is called a mismatch. The assets don't equal the liabilities. You deposited $100,000. There's supposed to be $30,000 in cash equivalent. Plus, you're supposed to have $70,000 somewhere within the system in one of these assets so that the assets you have completely and 100% equal the liability of the deposit. And what happened is when they invested in these collateral, it went down. So see, collateral is the backbone to the entire financial system. Our bank deposits, most of our debts, pretty much everything is backed by this idea of collateral or representative asset value on a balance sheet. Well, there's a problem with collateral. And the problem with today's collateral is that it's losing value. And it's not just losing principal value because interest rates are going up. Eventually, interest rates are going to go down, and that principal value will be driven back into the instrument. However, where it is losing value is through inflation. And inflation is the creation of new currency units that steal their purchasing power from the existing currency units, right? When they issue debt and new currency units are flooded into the system through government spending or through banks extending credit to consumers who then go and spend it, what happens is the purchasing power of those dollars are stealing from the rest of the existing dollars. And that's why prices go up. So in other words, supply can stay the same. Demand can stay the same. Well, you would expect price to stay the same, except you have to look at the other side of the currency pairing. It's not just the supply demand equilibrium that creates a price pressure. Remember, supply and demand are now the same. What's changed? What's changed is the amount of currency units in circulation. And as the supply of the currency units outpaces the demand for those currency units, the prices will go up automatically, even if there is no adjustment to supply and demand. So there's multiple factors that are affecting prices. And the collateral that backs this whole price discovery process is being devalued because the people who are in charge are abusing and misusing the system.
Yeah. And this collateral is not just an American banking phenomenon, right? Like, I mean, this collateral is the collateral that's used on a global financial scale.
Yeah. That's what's so alarming, is that it's not really about the dollar being the reserve currency. I mean, yes, it's great that the dollar is the reserve currency and that you can spend it anywhere. You know, hundreds of billions of dollars trade hands through consumers every single year. However, trillions and trillions of dollars worth of cash equivalent collateral switches hands between the biggest institutions that facilitate those micro transactions between the people. So the bigger picture is, it's not really the dollar is losing its reserve currency status. It's the fact that it's losing its reserve asset status. Countries around the world now, because of the level of dilution, I mean, let's just take an example right now. The 6-month treasury pays 5%, and the inflation numbers just came out. So they're 5%, even though the government inflation number,
yeah,
it's safe to say it's double that. And I hate using their numbers because they're just fraudulent. But let's just use their numbers anyway. Well, if you're earning 5%, but the rate of inflation is 5%, that's a big old zero. That means the real rate of return is zero, because the factory that you want to build, or the house that you want to build, or the good or service that you want to produce and serve to your market, your demographic, it's going to cost you 5% more this time next year. So if you're only earning 5% and things cost 5% more, you haven't gained anything.
Yeah. Why are you lending it?
That's not bad of a deal, really. But in real terms, what's happening is inflation is 10% and the yield is 5%. So even though the government said 5%, if you go back and you use the same government definitions before they were manipulated, you'll get that 10% or even higher number. So really, it's just about removing the manipulations. It's not about removing the government from the equation just before they perform their manipulations. You go back and use that same valid government equation. Inflation is 10%. So if you're getting 5% and inflation is 10%, well, 5% minus 10% is negative 5%. That means if you try to save, or if you try to preserve your value in this treasury collateral, then this time next year, you're going to be able to buy 5% less goods and services. You're going to have 5% less wages for your employees. You're going to have everything is your purchasing power is going down by 5%. And in a business, you know, for a person, it's easy to sneak by, but in a business, margins sometimes are so tight that this creates huge problems. So the abuse of the system, and people are saying, well, what does he mean abuse? Abuse. Listen, when you expand the dollar supply 40% in 2 years, that's abuse. Now, look, it's a privilege for the United States to be the reserve currency of the world. Being the reserve currency, and more importantly, the reserve asset of the world, has allowed the United States to expand the supply of dollars without causing inflation. Well, how does that happen? Well, because as the global economy grows, the demand for dollars grows. So if the supply of dollars stayed the same and we didn't create any more dollars, but the demand went up, guess what happens to the price of the dollar? It will go up. And if the price of the dollar goes up, that's deflationary, right? So I get some flack from Bitcoiners here, but we have to be true to the economics. The dollar, the deflationary currency as the reserve currency and reserve asset of the world.
Yeah, when compared to the other currencies, right?
So
the cleanest shirt in the dirty laundry.
Exactly. Now, what happens is, though, is the politicians and the banks. That's where the problem happens. Number one, the banks are going to extend credit, and when the banks extend credit, they're increasing the dollar supply, and when they increase the dollar supply, that creates inflation. Well, the governments, when they issue debt to pay for their budget, because remember, we want a budget deficit, so the budget deficit is close to $1.3 trillion. So every single year, there's $1.3 trillion or more of currency supply being added. So what happens is, if you're going to create additional currency supply, that's okay. However, you need to make sure it's offset by an increase. And the demand is increasing for the dollar, you're going to cause inflation. And that's really what's happened. The politicians and the bankers have abused the dollar system because we can't trust them. And that's what Bitcoin is about trust. Bitcoin is that Satoshi himself, there's been a breach of trust over and over and over again. It's not, he didn't attack the system. He didn't say the system was stupid, the system was this. He said the system lacks trust. And he's absolutely right, because what we see today is the abuse of that trust through the mismanagement of our system, where they're unhonestly expanding supply against an obvious lack of demand against that supply, causing inflation, and then raising interest rates to destroy demand and punishing the economy, punishing we the people for their own mistakes while not admitting their mistakes. So it's a catch, it's really bad where we are right now, because they're caught within their own lies. And unless they recognize their own lies and change their ways, there's no way for them to escape this. So they can't have their cake and eat it too. They either have to admit they're wrong and change their strategy, or just keep saying that they're right. And what's going to happen is the dollar will lose its reserve currency status, and more importantly, its reserve asset status. And I see a lot of people in the industry are like, other countries are still holding 65% of reserve assets. Well, look, past performance is not a promise of future performance, right? Or is it all of a sudden? And then if it is, okay, what about the past performance of Bitcoin? Things are looking good then, aren't they? Either past performance is not indicative of future performance, or it is. Which one is it? Well, it's not indicative. So we can't look at the dollar dominating the reserve asset market and the collateral market, because if countries are coming out like India and China and Russia and other BRICS nations, and even other bigger countries that were allies like us, like Saudi Arabia, are openly talking about joining them, what happens is the base layer of demand, dollar treasury collateral, is going to go down. It's going to diminish. And the politicians are admitting they're not admitting they're wrong. The government is still running a budget deficit, so the supply is still going to go up.
Yeah.
And the dollar is going to go down. That's going to create positive price pressure. So you can see how collateral plays a really important role in kind of being the backbone to the entire system. And where Bitcoin comes in is it's a better collateral. It's a much better collateral. Gold was collateral, right? Dollars were derivative of gold. You could take those dollars and turn it in for gold. And when the dollar was backed by gold, it was a derivative of gold. Now it's a derivative of debt. It's not proof of yesterday's hard work. It's promise of tomorrow's production. And when they print all these dollars and pull all of that demand from the future into the now, what they're really doing is stealing from their future. They're stealing from our kids. And you can't build a sustainable economy on that. So the collateral, whether it's debt-based or equity-based, it really does make a big difference on the sustainability of the economy and the growth of the economy. And because we're building on a house of cards, it's why we keep going through these cycles more and more rapidly. They're getting faster and faster, and they'll continue to get faster and shorter because we need a better collateral. Now, gold failed as collateral because you can't post $1 billion worth of gold as collateral and then settle with it with somebody across the world. If we're trading with India, or we're trading with Russia or China or Australia, sometimes it could cost more to transport the gold from one place to another than it did in the interest that you were borrowing against it. So gold didn't work. And that's when they had the idea to come up and make it legal that government debt would be a cash equivalent and then therefore serve as a pristine collateral. And now where Bitcoin comes in, starting out as digital gold, absolutely, 21 million coins, we're not going to find anymore. Natural asset value, producer economics that backs gold and that ensures that gold remains so valuable for thousands of years is the same business process and producer economics that protects the value of Bitcoin. Is that number one, unlike the paper treasury collateral, you can't expand Bitcoin. So it has the monetary properties of gold that we're looking for. However, unlike gold, it has the paper product, the paper derivative product that we're looking for, in that it can be settled easily. Because in 10 minutes, you can have a fast, cheap, secure settlement. There's no other financial product in the world that enables that still has the qualities of money, right? So Bitcoin is the next evolution of collateral. We went from gold and we went from currency being a derivative of gold to then the gold being placed with treasury collateral to now the treasury collateral being abused by the system through the massive expansion of it, going into Bitcoin where it gets the best value properties of gold of being a hard money, but also the best value of treasury collateral with fast and easy and cheap settlement.
Wow. Dude, you absolutely slayed that. I mean, it makes a ton of sense to me. At what point do you think it begins to make sense to nation states? Or what do you think? What do you think? This is kind of speculating. Everything that you've been talking about is more, makes a lot of sense and is more fact based. But what do you like speculation wise? Like, what do you think the steps are? Right? Do you think that they try to return? Seems like China, Russia, some of these other countries are trying to make maybe gold, oil backed some sort of currency or something like that. What do you think the process is, and how quickly do you think that countries discover gold as this collateral that you speak of?
Yeah, great question. I think that first of all, the thing with gold and any commodity backed currency is that settlement is still really hard. Right. So even if the BRICS nations came up with an oil/gold/whatever commodity backed currency that they're talking about, I'm not sure they really thought that through. Maybe they're just trying to capitalize on the momentum that's already existing by keeping the narrative going. But a commodity backed stable coin, because that's basically what a BRICS currency would be. It would be a stable fiat currency unit backed by commodities. Yeah. But somebody really wants settlement? What if somebody really wants the gold or the oil behind it? Now you're come back to the same problem that gold had when currency was a derivative of it.
Yeah,
you can't actually send it across the world. It isn't easy, and it isn't secure. So to me, all paths lead to Bitcoin. Now, the best part about this is that we're talking about versus economic incentive in the Bitcoin internet economy. So in the fiat system, they're using these reserve treasury assets as cash equivalent collateral because they're teamed up with the politicians, they're teamed up with the governments, they're teamed up with the regulators. They've all set this system up. It's kind of the status quo, and everybody trusts everybody. Well, now that people aren't starting to trust people, that's a big problem. And now number two, we talk about economic incentive, and this is the final nail in the coffin, because once you don't, look, in business, there's going to be some people that you don't trust. There's going to be some people that you don't get along with. But if you're a good entrepreneur, it doesn't keep you from doing business with them, especially if it benefits your business. So you find ways to find a middle ground and work together. And that's what's been happening. But now that trust is being broken because countries and huge firms are sitting on these treasuries and treasury collateral, and they're watching the value of that treasury collateral be diluted. The reason they didn't panic before was because in traditional finance, these US treasury collateral has become known as zero credit risk, because basically the Federal Reserve has a printer. So we can guarantee you the US government is not going to default on this debt. Because why would they default? All they need to do is print the money and send it.
Yeah.
Right. So in their mind, they were like, this is fantastic, because if I invest in some other country, they don't have a printer. And if maybe they do have a printer, but if they have a printer, there's no guarantee that that money is going to be worth anything. The United States is the reserve currency. Everybody's using it. Be demand. There's no credit risk here. And that was correct. But now with the lack of trust and the surplus of abuse, the real risk was not that there was zero credit risk and that I wasn't going to get paid my money. The real risk was when I get paid my money, what am I going to be able to buy?
Yeah.
And now it's the economic incentive behind Bitcoin, where Bitcoin is saying, hey, yeah, you can save your money in a reserve asset treasury collateral, and you can earn 3, 4, 5% year over year, even though inflation is at 10%. So, hey, after 10 years, you'll be minus 50% purchasing power. Or you can add something like Bitcoin to your balance sheet, which over the past 14 years has over 200% per year. So, in 10 years, you could have 20 times the amount of purchasing power potentially, or negative 50. See, now it's looking at the balance sheet and they're like, well, I don't trust that guy anymore anyway. Am I going to really hold through this and lose 50% of purchasing power just so I can stay in this deal with them? Or am I going to look to a new asset, a new collateral asset like Bitcoin that's actually going to increase my purchasing power over time? So we have those economic incentives, I think, that are helping break the trust even more. It takes two to tango, but there's no doubt the U.S. government and their financial policies, specifically their fiscal policies and the Fed's monetary policies, have breached that trust. And since they were the first mover to breach that trust, now the rest of the world is reacting because there's no way to store their value, right? Bitcoin is a savings technology. It's literally technology because of the difficulty and because of the halving and because of the producer economics designed to store value over time. A lot of people in Bitcoin look at the tops. Oh, it went to 1,200. Oh, it went to a couple thousand. Oh, it went to 10,000. Oh, it went to 20,000. Oh, it went to 70,000. Well, if you really understand Bitcoin, your answer to that is who cares? What I care about is it went to 100. It went to 500. Then it went to 1,000. Then it went to 3,000, to 10,000. Now it went to 15,000. The definition of store value is higher lows, not higher highs. The demand bubbles, the burst of demand against the limited supply is what creates a large premium. But when the bull market ends and we go into a bear market and that demand premium diminishes and we go back to fundamental value, where do you end up? You end up at the natural asset value. You end up at the natural supply demand imbalance. When all of that demand premium is erased and we get back to the natural balance of things, you end up at a higher cost of production, a higher natural asset value. Because more people are participating in the network, the difficulty has gone up, the cost of production has gone up, and therefore value has been stored properly, and natural asset value will continue to decrease over time. So if they can understand that, which I think they're starting to understand, incentives, this thing's going to snowball very quickly.
Yeah, I would guess so. That's very kind of you to think of these nation states like they're looking at their balance sheets like it's a business as opposed to some sort of totalitarian debt fiesta.
I'm sure. Yeah, there's definitely some countries out there that are not interested in Bitcoin at all. And that's another value proposition of the dollar. Another value proposition of the dollar to these other countries is, well, wait a second. If we stick with the dollar, then we can just print the currency that we want to print. And we might go against the dollar, but we still have the ability to print. And that means they still have the ability to extract value from their citizens, because that's what the fiat system is designed to do. The fiat system is designed to extract value from the people who participate in it when it's abused, right? So when this is abused like it is now, it's that abuse comes in the form of extracting value from your citizens. So these other governments, like you said, they might not want to switch to Bitcoin because they lose the ability to extract value from their citizens.
Well, I would have to imagine before we see any type of like direct use of Bitcoin in a lot of these places, that perhaps they keep their ability to extract that value by backing their currency by buy Bitcoin, right? Like, so having X amount of Bitcoin on their balance sheets, then they can still print money and devalue at their whims, right? At least in their local economy, but on a global scale, right? That would have some major effects.
Yeah. Well, this is a really good point. And this is actually a point I haven't talked about in any of my interviews yet. So some alpha drop here. The problem is fractional reserve banking. Because let's say there's some country that backs their currency with Bitcoin. Do you know what I'm going to do the very next day? The very next day, I'm going to go to my banking partner who I have a relationship with, and I'm going to say, hey, look at these guys. They're backing their currency with Bitcoin, and there ain't no way in hell that they're going to not abuse this system. I want $1 billion loan in X currency. What am I going to do with that $1 billion? I'm going to take that $1 billion just got from the bank. I'm going to go to them. I'm going to say, hey, I'd like to redeem my Bitcoin, please. And they're going to be like, we don't even have, what? You want $1 billion in Bitcoin? For what? For the currency that you backed it with. Saying so.
Yeah, that's what Michael Saylor's doing. Exactly. More or less.
Exactly. So when Michael Saylor is performing a speculative attack on the dollar with debt, and if other countries try to back their currency with Bitcoin, as long as fractional reserve banking is a practice that is accepted, there will be speculative attacks against that currency to accumulate Bitcoin.
Yeah, and more or less, I guess, if that's the case, it would happen to the point until all of those currencies get destroyed over a period of time.
Oh, yeah, because it'd be a race. It would be who could print the fastest because we want Bitcoin.
Yeah.
Right? Right now, it's like who can print the slowest because it's a war of attrition. They want to extract value. They don't want to lose their ability to extract value. So it's about putting the limit. How much can we print? How much can we extract without losing trust? Because once they lose the trust, they lose the ability to inflate. So,
which I'm sorry to interrupt, which blows my mind that that could be a potential route. And in the meantime, our government in the United States is selling the Bitcoin that they confiscated. I'm like, it makes me sick thinking that, sell down our strategic oil reserves and sell off all the Bitcoin that they've confiscated over the years, and just kind of going like, oh my God. And in the meantime, we're all thinking like, the country that begins to just print their own money and buy Bitcoin is probably going to be, the one who wins.
That's exactly right. That's the trick. It's actually a matter of national security. It is literally a matter of national security and I don't know who gets to make that decision. Who the hell is the person that gets to make the decision to offload the Bitcoin on the U.S. balance sheet? I don't know who that person is, but they will go down in the history books as like the Kramer, inverse Kramer, it is the worst decision that could be made, to the point where they're putting the future of American patriots and American freedom and American law at risk because they don't understand what they're doing. So the people who are in charge right now, Bitcoiners need to come together. We need to support. Listen, I don't know who's going to do it because everybody who's in Bitcoin not be a politician, right? We actually need people in decision-making roles who understand what's happening, because if we don't get this and we go the route of China and we start banning Bitcoin mining and we start doing capital flight controls, which arguably might already be underway, we're going to have a lot of trouble, and there will be a division in this country. It's already the greatest it's ever been. That goes right back to the trust factor we were talking about. I think a lot of those outside countries, they're talking to the higher ups. They're talking up to the elites. They don't see the everyday people in the United States. I'm in Florida, and I have met so many people who've moved here from blue states. And I say, my job came down here, or, I had an opportunity. No, they actually sacrificed economically to come down here. They actually gave up stuff and gave up their salary and gave up additional benefits to come to Florida because they wanted to be where they know they could be free. They wanted to know that they were going to be in a place where during the coronavirus, leaders were able to at least think straight and not act out of fear and not force you to do certain things. So maybe things were bad for a certain amount of time, but Florida was one of the most freest states in the world during the global lockdown. And a lot of people recognized that and said, oh my God, if this happens again, I want to be in a state like Florida, where I know I'm going to have the most freedoms possible. And there's a huge divide in the United States right now, an ideal divide that is accelerating. And we're kind of losing trust with each other because, look, it's not that hard, right? One group is saying, just leave us alone, right? We don't want taxation without representation. We understand that you want to collect taxes to build roads and provide schools and do all that stuff. Private companies could handle it, but we'll let you do it anyway.
Yeah.
Okay, we'll let you do it anyway. But we draw the line at inflation. We draw the line at allowing our kids in the library. We draw the line with you teaching our kids it's okay to harm your genitals. We draw the line when you attack our children. We're in Bitcoin for the kids. We draw the line at for the kids. We draw the line at freedom. The other side of the argument doesn't really understand that. They think the government is the giver of freedom and the protector of freedom rather than the taker of freedom. And these outside countries, I don't think they truly understand the dynamic in the United States right now and how divided we are. And I'm not a red or blue guy. I'm an independent. I don't believe in the red-blue paradigm. I think it's a psyop, but it's true. In the United States, people are mainly split between being red or blue. And now it's not just split city by city, it's split geographically. People are moving to different states for their ideologies. And very quickly, that could cause a huge problem for the United States, not only in our society and our culture, but to me, more importantly, in the financial system. Because once you lose the financial system, once you lose that backbone collateral, all hell is going to break loose. So we need to educate people about Bitcoin, how it's a better collateral and it's a better system. And one last thing I'll add here before I take a breather is that I think Christians need to pay attention to Bitcoin as truth money, because the Lord calls us to be savers and to be lenders. And the problem is that we're saving, but we're not saving as good stewards. We're saving in something that's being diluted, which is the dollar. And we're lending. But who are we lending to? Like we said earlier, we're lending to the bankers.
Banks.
And who are the banks lending to? What worldly events and agendas are they financing with your money? Can you be considered a good steward if you're saving in a money that's not a money, that's a currency that's being diluted, and you're lending to bankers who finance moral agendas? We need to take a deep breath and say, maybe it's time for us to separate our economy from the worldly economy. Maybe it's time to make sure we save in a hard money like Bitcoin that's going to guarantee our purchasing power into the future. And maybe we should lend to fellow Bitcoiners who understand that you've crossed the line and we now want to protect our time and energy, not only for us, but for our children and our children's children.
Yeah, that's an interesting perspective. Thanks for putting it out there, for sure. I mean, I think generally speaking, a big thing for me is that a concentration on Bitcoin as that worldly collateral, or just on the principles of Bitcoin and what it teaches you, is just that, like, us as a country will do a lot better if we concentrate on production, right? And in a Bitcoin economy, you're not getting my Bitcoin unless you're producing some sort of value for me, know?
Exactly.
And I think it's the great, I'm sorry.
No, you go ahead. Go ahead.
I was going to say, and I just think it's a great way to center what's, like, all the stir that's going around, everything that, people are living lives beyond what they actually produce, and debt. I've recently started to think of like debt as like the great mask of pain, right? Like you could really, really mask the pain and the financial struggles you're in by taking on debt and kicking it down the road, like our government is teaching us to do. Yeah. But in reality, if we just concentrate on that production, then we can do things like you're saying, like lend. We can be good stewards. We can, we can get away from all of this divide. And I think it's a tool for us to do that.
Yeah, absolutely. Well, it flips the incentive structure, because you just hit the nail on the head. debt is supposed to be an asset for the lender. But the way they have abused the system, it's become an asset for the borrower. And that makes perfect sense because we, the people, are the lenders and the governments and the banks are the borrowers. So of course they rig the system to benefit themselves because they're the borrowers. So the lenders are getting ripped off and the borrowers are getting all the benefits. So debt is an asset to the borrower. Here in the United States, they just approved a 40-year mortgage. Well, I think it's pretty safe to say that if somebody buys a house with a 40-year mortgage, you're a genius because maybe 10 or 15 years, maybe way sooner than that, you'll just be able to walk out on the street. And just like in Venezuela with the bolivars sitting on the ground, you'll be able to pick your dollars up off the ground, walk into the bank and pay your mortgage. So what time and energy and effort, except a short walk outside to pick up some dollars because debt has become an asset for the borrower and a liability for the lender. But in a Bitcoin economy, we go back, we flip the script and we go back to a true free market structure and incentive structure where debt is an asset to the lender. You know, and a lot of people get scared because they say, well, with so few currency units, won't the interest rates be pretty high? Yeah, absolutely. High, because the amount of available capital is going to be low and the demand for that capital is going to be high. So when you have low supply and high demand, price goes up. Interest rates are going to be high, but don't worry because guess what happens? The savers are the lenders and the savers become empowered. So imagine if you could have your savings in a bank account, but it was a Bitcoin bank and your interest rate is 18%. That's fantastic because you're going to be able to save up much more quickly. And what that does, Bitcoin empowers the savers to become eventual spenders or investors. And that spending and investing stimulates the economy in a sustainable and healthy manner because it's not debt-based and it's not a derivative of debt, but instead it's equity-based. And what they're spending isn't borrowed from tomorrow, it was earned from yesterday. So that's
wow, man. Dude, you've got me all types of jacked up right now. I'm ready to go hit the fiat streets and get sell some more elevators and get rocking and keep saving in Bitcoin. Man, I appreciate your time and having you on the show. I hate to cut you off because you're just killing it, and I feel like I could talk to you for a couple more hours, but I want to respect your time here. But one question. Before we peel out here that I ask every one of my guests is, in my fiat job, I am an elevator salesperson. So give me your 30-second pitch for Bitcoin. Your 30-second elevator pitch.
I think the 30-second portion is harder for me than the... So, Bitcoin is commoditized energy in the form of money. Bitcoin is the reserve asset of the internet economy. The only economy in the world with free market interest rates. If it's not okay for people to tell us the price of milk and eggs, why is it okay for old people at the Federal Reserve to tell us the price of money? The price of money should be determined in a free market, supply-demand price equilibrium, just like any other free market. And finally, Bitcoin is the most pristine form of collateral in the world. It's an equity-based collateral that has all the benefits of gold, plus it's a digital-based collateral with all the benefits of paper, which are fast, cheap, easy settlement, plus you have the security, which the paper doesn't have.
Amazing, man. Well, thanks again for coming on. Let everybody know where they can follow you. I mean, this content, I mean, I haven't been so excited to hear somebody talk, right? It's new. Your thoughts are cohesively put together on a variety of topics, so I appreciate it. But let people know where they can continue to hear from you and see what you're working on.
Yeah, thank you. I appreciate it. And thanks for having me.
Yeah, absolutely.
Your time as well. And everything adds up for everybody out there. It's about educating the masses and letting the world know that this is coming. And like I said earlier, whether you want it to, or you don't want it to, or whether you think it is, or whether you think it isn't, it is absolutely coming. It is an economic reality that is fast approaching. So tell your friends, tell your family, and let them know to get prepared for what's coming, because you're not going to hear about it on the television. You're not going to hear about it from the politicians. and reality is changing in front of everybody's eyes. So go out there and make it happen. As for following me, the best place to follow me is on Twitter, just at CJ Konstantinos with a K. I'm a Greek. I'm working on a project right now. It's a Bitcoin business called People's Reserve. We're a market maker for the people. And I believe the future of finance that is built in the internet economy, the only economy with those free market interest rates, all future finance is going to be based off of Bitcoin equity. And that's what People's Reserve is. It's a business that is going to be offering different products and services built around Bitcoin equity to empower governments, businesses, and individuals. So I'm still under NDA. I can't talk about it, but we've been building for quite some time now, and we're very excited. Probably in the next year or so, you'll start hearing about us. So keep an eye out for that. Follow my YouTube channel for short clips that you can share with family and friends. And that's it.
Very cool, man. Well, thank you again. Take care.
Thanks, man.